Hey, this is Jeff Rose from GoodFinancialSense.com. Are you a business owner that is finally starting to see some profits? You've been slugging away for several years and now you're finally in the black and you want to start thinking about retirement. You know that you need to save, but as a business owner, you have a plethora of different retirement plan options that as an individual you didn't. If you're confused and bewildered and not sure what direction to go, I completely understand. I was in the exact same situation as you. I was a W-2 employee, and then when I became a small business owner, I now had many different options that I could choose from, and initially it was kind of overwhelming. It was easier for doing for the client, but now that I was actually on the business owner side of things, the 1099 independent contractor side of things, I now wanted to make sure that I was doing the best retirement plan for me. So if you are looking to see what retirement plan is best for you, here's a few options to consider. Number one, a traditional or Roth IRA. Now I'm sure you're probably wondering, well, Jeff, I could do that when I was an individual. What's the benefit for me doing it as a business owner? Well, here's the thing. The beauty of doing the traditional Roth IRA, if you're not putting money in those plans at all, and maybe you are profitable, but you're not as profitable as you would like to be, under the age of 50 and under, you can still put in $5,000 on either the traditional or Roth IRA. So at least that's a good starting point. Now, if you can put in more than that $5,000, then we'll start looking at the other options coming up. Number two, a simple IRA. Now, the simple IRA is the name I think is a little bit misleading because to me it's not quite that simple. But here's the general gist. You're able to put in up to $11,500 per year into the simple IRA. Over the age of 50 is allowed a $2,500 catch-up. But if you have employees, here's where it gets a little bit trickier. To make it simple, just know that you're going to have to put in about 3% of your employees' wages into as an employer contribution. So that's how much as a business owner you're going to be out for each employee. Now there are certain rules that say that you can dip below that 3% over a 2 out of the 5 year period, but I don't want to muddy the waters too much. Just know that for the most part you're going to have to put in about 3% of your employee's salary to be able to contribute the 3% for yourself as well. Now that might sound a little bit confusing, and I tell you what, it kind of is. But if you go to the blog and look up, do a Google search for simple IRA rules, you'll find out more about the simple IRA and see if that applies to you. If you have more than $11,500 to put in, the next option you might want to consider is what's called the SEP IRA. Now, SEP IRA stands for Simplified Employee Pension Plan. A SEP IRA allows you to put in either 25% if you're a C corporation or 20% if you're self-employed of your gross annual income. Now that is a pretty good net clip that you can put away. You're going to cap out at $49,000 to put in the SEP. Now for me, as a business owner, that is the actual direction that I went. And the one thing about the SEP, when you compare it to the simple and the traditional, the one thing that I like about that, especially for a business owner, is that they are very cheap to set up. To set up any of those plans, you're going to pay your annual IRA custodial fee, which is going to be somewhere in the neighborhood of $25 to maybe $50 per year, and that's it. You will have to pay the costs associated with the investments inside that plan, but to actually get that set up, it's very cheap. There is no IRS filing documents. There are no annual filing fees that you have to do with those plans, so that's why it's very popular. And just so you know, the SEP IRA is the direction I went with my business and have done so for the last 2 and going on 3 years. Now, the only downfall with the SEP is that you can only do a percentage of your income. So you can't just put in some arbitrary amount. Now, the other downside is if you have employees. So if you're, say, going to do 20% of your income, then you have to do 20% of all your employees' incomes that qualify for that plan. Now there are certain discriminating rules that you can do that can leave certain employees out, but if they qualify, then knowing that whatever you do for yourself, you're going to be doing for them as well. And that can get fairly expensive for a business owner. If you have several employees and you're looking to put more in and you don't want to be held to that 20% standard, then the next step is looking at a traditional 401k. The traditional 401k allows you to put in up to $16,500, and that you can just put that in. That doesn't have to be a percentage of your income. And the basic 401k plan, you don't have to match for your employees. So if you want to do the 16.5 and that's how much, and that's all you want to put in, and you don't want to match for your employees, then that's fine. You can do that. Now, if you want to start matching for yourself, then that's where it can get a little bit more complicated. You can have what's called a profit sharing plan or a safe harbor 401k. Basically what that means is that if you're going to start offering matching, like if you want to be able to put more than that $16,500 per year, so you're going to do an employer contribution, then you have to follow certain testing rules to where what you put in for yourselves have to be some type of pro rata portion for your employees too. And if you want more information on that, you can also head to the blog and type in traditional 401k rules to kind of see how that works. Now, if you are a owner-only business, an individual that's just self-employed, you have another option that's called the solo 401k. And what makes this neat as opposed to the SEP IRA is this. You get to put in the $16,500 immediately. So right off the bat, you're not held to that percentage of income that you are with the SEP. Furthermore, not only can you do the $16,500 in the 401k, but you can also do it in an employer matching contribution, which then falls under that same 25% and 20%, whether you be a C Corp or a self-employed sole proprietor of the net income. So immediately you do the $16,500 in the owner-only 401k, the solo 401k, and then you can add a matching contribution based off your net income. And then all of a sudden, bam, you are putting that much more away in that solo 401k. Now, if there are any downsides to the traditional 401k or the safe harbor 401k or the solo 401k that I mentioned, the one thing I say is probably cost. With those, you will have to file some type of IRS filing fee. With the traditional 401k, you have the Form 5500, which, because it is an ERISA powered plan, so therefore you will be held to different standards. Now, the cost will vary. I've seen anywhere from $250 on up to like $1,500, depending on how big the plan is, how many different options you want to have, and all that sort. Now, if that's something you are considering, I definitely encourage you to sit down with a financial advisor or a CPA that's skilled in setting up business retirement plans for you, because you just want to make sure that you get it set up right. So if you are a business and you're looking to adopt some type of business retirement plan, those are a few of the options that you have, and those are probably the most popular option that you're going to see. If you have any more questions, feel free to come by the site, www.goodfinancialsense.com. I've got tons of information there, more on all those different type of retirement accounts for you. Hope you enjoyed the video and look forward to seeing you again.